This is Asia Times News Video.
This is David Goldman, Asia Times Deputy Editor, speaking to you from New York City the evening of March 21st. The 30-year Treasury yield has climbed all the way back up to its 2019 level, and that's mainly because inflation expectations are back up to levels we haven't seen for years. Even though the Federal Reserve has kept short rates very low, the long-term rates are rising because no one believes the Federal Reserve can keep this juggling act going forever. The U.S. government is now borrowing annually the equivalent of a fifth of GDP, and the combination of a falling dollar and rising commodity prices mean more inflation in the future. And we see that in the chart where inflation expectations, as measured by bond yields, have risen to levels we haven't seen in a couple of years, and that's dragged up the overall level of Treasury yields at the long end of the curve. Now, the Federal Reserve financed virtually all of the Treasury deficit during the past year, and some seasoned and respected market observers are warning that the consequences may be nasty. Bridgewater's Ray Dalio, one of the world's most successful investors, told the China Economic Forum on Sunday that foreign investors who haven't been buying Treasury securities might start to sell the Treasury securities they already own. He said this is very bearish for the dollar. And to quote the late economist Herb Stein, anything that can't go on forever won't. This is carefully noted by Chinese observers. Fudan University professor Bai Gong told the Observer, or Wancho website, last week, for the past year, the U.S. has continued to issue more currency to ease its internal situation. The pressure will eventually seriously damage the status of the U.S. dollar as the core currency in the international payment system. Now, if the dollar ceases to be the core currency in the payment system, people will have less reason to own Treasury debt. The first cracks have already appeared, and it may take weeks, months, or even years for the U.S. government's borrowing binge to damage the dollar's reserve status. But when that happens, it will be a very unpleasant experience indeed for investors, so be afraid. Be very afraid. This is David Goldman speaking to you from New York on March 21st.
This is Asia Times News Video.